Hello, everyone. Paul Lizell here again, and I'm going to dive into another article here from Housing Wire, I believe this is, talking a little bit about that Redfin article I spoke about before, about the numbers and where they are. And this article is getting into, are we at the end of the market? Is the housing market starting to weaken? And weaken, they mean not getting to a weak market, but is it weakening from this crazy mania peak that we've been at for, I'd say, the past 6 months or so? And really in the past 3 months, because we get into the spring market where it just goes insane, it'll go into the summer. And I do feel personally that we're at the peak, and I do feel it's going to start to weaken here. You'll start to see signs of it in August. August is always the time that you start to see some of the signs. September will be the next one, and October, obviously November, December, it should weaken in all those time frames. But what are the drivers? So what are the things really pushing the market up? So for me, interest rates, dirt cheap, 3%. It is hard to beat that. This article is trying to say that mortgage rates spiking 6 basis points to 3%. Are you kidding me? 3% is spiking. That is cheap money. Get to 5%, 6%, then we'll start talking about weakening in a market and reducing demand. But what we have right now is really low interest rates, which are allowing people who have pandemic fatigue. Everybody out there has pandemic fatigue, I'm sure. Everybody's sick of this, can't wait for it to be done, and life to get back to some sense of normalcy here. So that's a factor that's driving this market as well, because what it allows is, with a 24% increase in your housing value of your home, you're now able to sell and move easier. With things selling quickly, this just speeds up everything, speeds up the whole process, and allows you to move, have some money in your pocket, and either rent for the time being or buy somewhere else. You know, all the markets are hot right now, except for New York and California and North Jersey. The rest of the market, South Jersey's hot. People want to get away from the city, away from the crowds because of this whole pandemic. So those cities there will still be that mass exodus from cities. I see that probably ongoing for the next few years here. And then at some point, the trend may reverse and go back. But for now, we are in a trend where we're exiting the cities. So that's what we're looking at here with all the data, and people are moving away from the cities, and they're either going to sell and rent. Look, what this pandemic has also allowed is for people to work from home, for companies to let people work from home. So you can work from anywhere if you're working from home. You're doing your meetings on Zoom like I'm doing this here. It makes it very, very simple to work from home. So now, if you ever thought about moving where in the past you couldn't move because, either you're worried about the kids' school or the kids are gone and you're worried about, I got to be able to work. I got to be within half an hour of where I work. Now you don't have to worry about that. You can live anywhere and still work for that company. And most companies are good with having you work from home. So I think that's a factor that has been pretty big and has allowed people to shift and move. So that's why you have so many people moving. People like myself, I'm moving from Pennsylvania to Florida. Was looking at Texas for the longest time, and just real estate taxes are a bit high there. I have family in Florida. I have a little brother and sister that I think are now going to get involved in the real estate business with me here. So that was a kind of a factor for me as well. I want to teach them and help them get into this business and be successful, as I want all of you to be successful doing this. But knowing that the market is at its peak, now you need to prepare. As a real estate investor, you need to prepare for the next trend in the market, because right now what I'm doing, getting properties, I'm just listing them on the MLS and selling them and making good profits on them. It's not going to be like this for forever. This is a very short window what we have here. So we got to look at what is our next step. Okay, next step, you go back to wholesaling, maybe a larger scale fix and flip, or just wholesaling. I love wholesaling. I think wholesaling is going to be around for a while. As long as housing is affordable, people don't mind. It doesn't have to be perfect. It just needs to be good that they can move into, and then they can put their own touch on it. So I think that's where we're going to. And as far as what the drivers are in the market, another driver is what's allowing people to qualify, more people to qualify for mortgage, is the helicopter money from the government, all the stimulus that they're given. If you're somebody like me who has 4 kids, you're getting a pretty good check from the government that you can use as down money towards the house, and the mortgage companies are allowing to use it as down money. So as far as qualifying you, because everybody's income's up. I think incomes were up like 20% if I remember looking at this past year, 2020, and that was all because of the stimulus and what was going on there with government giving money. It's going to be similar in 2021, and at some point they kind of have to stop with the stimulus and the increased unemployment income, all those things. So that will settle. Everything is going to settle, and then we're going to see the housing markets, as it hits its peak, it's going to start to come down. And will it come down heavy? I don't think so. The only way it really drops precipitously is if there's an increase in interest rates, or if there's a sudden flood of inventory, which is not happening. And we can take a lot more inventory without really hurting the market too much. But the rates would be the biggest driver on markets. Weather in different areas may be a driver on markets. Like, if there's a lot of hurricanes hit a particular region, people are less likely to be there, obviously. A lot of people want to escape the cold and go to the warmer climates right now. So your RCN knows that exodus as well. A lot of the people who were snowbirds, some of them are just now moving to the warmer climates. So those are factors that are going on, obviously, in our market, and where you need to look at. I think right now, as an investor, you need to look outside the main cities. You need to look into the more rural areas where you have less competition, or just outside your general normal investment territory. Expand out 30 minutes, 45 minutes, an hour, hour and a half. I mean, look at me, I look at the whole country, so I'll buy anywhere, and I don't care how rural it is, I'll find a way to sell the property. There will be lots of interested buyers, especially with owner financing in your tool belt. That allows you another way to get rid of a property and bring in a good income for yourself. So anyway, hope this article helped. I just kind of want to give you an idea what's going on with this market here, where I think it's headed. Again, I don't have a crystal ball, don't know exactly where it's going. It's just kind of a feel I have that we're going to start to see the decline starting late summer, really early fall into the winter next year. Then we'll see a little spike up again next spring, I believe, as long as rates stay low. And then, it'll kind of settle hopefully into a more normal market. All right, everyone. Thank you again for listening, and we'll catch you at the next one.